Today, we're going to go over technical indicators. This is the most common question that I get asked all the time, right? What indicators do I use? What am I looking at on my chart? So wanted to go over some indicators, exactly the indicators that I use regularly on a daily basis so you guys can see it, right? And then so you guys can use it for yourself, right? And for those that are your first time here, all right, I am the portfolio plug. All right. So this is pretty much what I try to do is give as much game as possible, help you guys in any way, shape, or form. So therefore you can take advantage of what's happening in the economy right now. Options trading has been wonderful to me. I've made money through the stock market. So the least that I can do is just pass on my knowledge and share it with you guys. So therefore you guys can take advantage as well. All right. So it doesn't hurt me to share the information that I have, because at the end of the day, I'm still going to be able to get up. I'm still going to be able to trade. I'm still going to hit the market regardless. All right. So I don't have a course or anything like that. So everything that I do, I try to give it through here. So that's why, I do the webinars. Right. So thank you for jumping on. Right. With that being said, let's get going. All right. So technical indicators, the most common question I get asked all the time. Right. So what is a technical indicator, right? So like, what is it, right? So when it comes to technical indicators, right, all it is a pattern-based signal, right, that is produced by using price, volume, open interest, contracts, right, and contracts that were used by traders, right? So pretty much it's like a historical data, right, that's used in order to predict future price action, right? And then traders use indicators in order to identify entries and exit points. This is how I make my watch list daily, right? By using different indicators, using the time frames, so all these different things, I combine it, and that's how I'm able to find entries, exits, right? So I want to show you guys the most common indicators that I use, right? I'll share my screen and everything for you guys as well, so you can see as well, right? And then for those that are watching on YouTube, and I'm going to be posting this on YouTube, the replay as well. Thank you for watching. Make sure you hit the subscribe button, and then you can leave a comment, question, your thoughts at the bottom, and I'll try to get back to you. And I'll leave the link in the description below as well. All right. So like I was saying, so indicators pretty much it's used to identify entries and exit points, right, in order for you to find the best spots to get into trades, right? And it's taking a combination of volume, right, open interest, contracts, right, the price action, all that is taken in consideration in order for you to be able to predict the future price, the future movement of that stock, right? They do not focus on fundamentals of a business, right? So things like earnings, revenue, profit margins, and anything that you look at when you're looking at investing for long term or just in general, right? When you're looking evaluating a stock, you do not use that, right? So it's all just purely just looking at the charts and seeing all the different indicators, all the different things that you can use. It has nothing to do with the revenue of the company, right? So that's the main thing, right? So who uses them? That's us, traders, right? And let's show you how it works. Right. So there are two different kinds of indicators, right? Two of the main kinds, right? So we have overlays and we have oscillators, right? Overlays and oscillators. So the difference between the two is, right? So with an overlay, pretty much it's the technical indicator. It uses the same scale. It uses the same scale as prices. So pretty much you'll see it on the graph. So it uses the same scale as prices are plotted over and top of the prices on the charts. So in other words, what it is you'll see it on the chart versus an oscillator, right? For that, you'll see it like at the bottom or at the top, right? So the actual true technical definition is the oscillator it oscillates between a local minimum and a local maximum, and they're plotted above or below the price of the chart, the price, right? So all it is you'll see it at the bottom or you'll see it at the top, right? And then for overlays, you'll see it on the graph, right? And then different kinds of overlays we have Bollinger Bands, moving averages, oscillators. You have stochastic oscillator, You have the MACD, the RSI. These are things that I use regularly, and I'm going to show you as well. All right. So I'm going to share my screen. I'm going to share the graph so you guys can see exactly what I'm talking about. So let's put it in one so it doesn't confuse you guys. So I'm just going to show you so you can see. Let's keep it simple as possible. All right, so overlays, you'll see it over here in the graph, right? These are like the moving averages, all these different things, right? I'm going to explain what each of them are as well as we get further in depth, right? And then for oscillators, these are down here. These are all these things that are down here, right? So right here, the volume candles, right? The MACD, the RSI, right? And then you have the volume, right? So pretty much all these at the bottom, these are your oscillators. And then anything that's on here on the graph, these are your overlays, right? Overlays, oscillators, all right? So again, you want to look at anything that's in the graph. Those are your moving averages, right? And then for the bottom, the oscillators, these are your MACDs. These are literally all these that you're seeing right here. These are what I use regularly. And I'm going to explain them one by one for you guys. All right. So let me reshare again, go back. All right. So kind of going back to what I was saying, right? Overlays, the first one, right? So moving averages, right? So for the overlays, moving averages, right? These are, I'm going to show you exactly what I use, right? So one, what is a moving average, right? So the moving average, it helps to level out the price over like a specific period of time. So it creates like it's like a constantly updated average price, whether it's a 50-day, 100-day, 200-day. So it's constantly updating, right? And that gives you this like the price over time within that period of time, like the average, right? It helps to identify the trend direction of the stock, right? So that's what you want to use moving averages for. It can also act as a support level, and it can also act as a resistance level, right? And the thing to remember about moving averages is, right, it's lagging. And what I mean by it's lagging, it's trend following. So therefore, because it's based on past prices, so it's lagging. So say if you go back 50-day, 100-day, 200 days. So the longer, right, the longer of a period that you have, the bigger the lag. So a 200-day moving average will have a much greater degree of lag versus a 20-day moving average would have a shorter degree. So the bigger it is, the more of a lag it is. The shorter it is, the less of a lag it is, right? And then you have SMA, you have your EMAs, right? So your SMA, that's a simple moving average. So for the simple moving average, all it is a calculation that takes like the arithmetic. Think of it this way, right? It pretty much is giving you the set price over a specific number of days, and just basic terminology for you, right? That's all it is. Versus the EMA, which is the exponential moving average, it's the weighted average that gives a greater importance to the price of the stock, right? So therefore, in the most recent days, you'll get a more accurate number based on the EMA, right? So for SMA, I like to use the 50-day, the 100-day, and the 200-day moving average. For EMA, I like to use the 8 and the 21-day moving average, right? So SMA, the simple moving average, I like to use 50-day, 100-day, and 200-day moving average. For the EMA, 8 and the 21. And then you can use them differently and depending on what time frame that you're looking at. The shorter time frames, you want to look at the 8, the 21, right? Those ones are a little bit more accurate. For like the bigger time frames, I won't use the EMAs. I'll use the the 200-day moving average, the 100-day moving average, the 50-day moving average. And I'll still use those regular as well, but not at the same rate as the 8 and the 21 in a shorter time frame. Right. So I'm going to show you too. I'm going to share the screen. And then I'll answer some questions afterwards for you guys as well too. So I'm going to share the screen again. You guys see my screen? It's on the chart right now. It's on SPY. Just type in yes for me. Just want to make sure that you guys are seeing everything. All right, perfect. Great. All right. So let me clear this out so you guys. All right, so we got our overlays. Let's start with that, right? So right now we're looking at the moving average, right? So this right here, the purple line, this is my 8 EMA. This is my 21 EMA. This is my 50-day moving average. This is my 100-day moving average, and this is my 200-day moving average, right? So if you notice the 200-day moving average, I'm looking at the 1 hour time frame for SPY. SPY dropped today after the Fed meeting, right? And then it bounced off the 200-day moving average. So like I said before, it can act as support and resistance, right? So on the bigger time frame, you'll see, right, the 200-day, the 100 days, right? Those one you'll see bigger, you'll see a lot of support and resistance. I like to use it on the bigger time frames, right? If you notice, just like right here, right? And in the smaller time frames, it'll still act as support and resistance, but the 8 and 21, as you can see right here, right? So we had this downtrend, right? So we stayed below the 8 EMA, right? Oh, we rode on top of it, right? So pretty much the 8 EMA I use it in the short time frame, the 1 minute, the 5 minute, right? Those are what I look at more often. And then I also take in consideration the other ones. If I happen to see like the price action is running into it from the big time frame, and now, like for example, let me show you. Like with this right here, right at 391. So say if I was trading in the morning, I would look to see, hey, is it all as well on a 1 minute or 5 minute? Is that something that I'm seeing in the near, right? So as you can see right here, pretty much everything is like around the same price right there, right? Around the same price. So in the 1 minute, because there are times you can see it in 1 minute, it'll be a major support and resistance as well, right? But the thing that you'll see more regularly is the 8 and 21 EMA, right? And then different time frames that I use, like I was saying, the 1 minute and the 5 minute for the 8 and 21. And I'll still take these in consideration if I see them. There are times where I've caught like using the 200-day moving average, where I'll see it more on the 5 minute time frame. Right? I'll see it more in the 5 minute time frame. And then as you can see right here. And I know it probably looks like a bunch of spaghetti, but when you look at it so much and so regularly, it'll be so natural. It's like drinking water. You won't even think about it, right? And there are times, say, if depending on the time frames that you're looking at, where I'll just remove, like I'll remove 1 or 2 or something like that. I'm like, all right, I'm looking at this time frame, right? And let me take this out, right? And there are times where I'll just leave it, like right now, like I'll leave it on there, right? And then I'm going to show you guys an example of how I used it. All right, I'm going to show you guys an example of how I used it to make money. All right. Can you guys see this, the Discord? You type in yes, just want to make sure you guys can see it. All right, perfect. All right, so I'm going to show you, I had caught Tesla on a bounce on the 200-day moving average on the 1 minute, right? So when you look at the 1 minute, you can't really go back further than 2 days because one is the time frame is too small. So I'm going to show it to you guys because I had screenshotted it before I got into the play. Let's scroll. It's somewhere. Tesla. I remember this one. See, this was the 200-day moving average, right? So that's not Tesla, but just real quickly, the 200 moving average. as you can see right here. All right, this was it right here. All right, so I had caught this play, like right here. I was using the 5 minute, and then I was using the 1 hour. All right, and I saw it on this time frame. This was the 200-day moving average. Right, this was the 200 moving average right here. Right, so I saw it in the big time frame, and then at that time I took off the 8 and the 21 EMA, right, because I was seeing it on the bigger time frame. I was seeing a bigger move, right? So I took it off and I just left the 50-day moving average, the 100-day, and the 200-day. This is what you're seeing right here, because I saw that was a major support and resistance using those time frames, right? With those specific SMAs. All right, so right here, as you notice, the 200-day moving average, it was a resistance right here. It was a resistance, brought it back down here. It bounced, broke it, went back up, but it ultimately came back down and bounced off this right here. So you got 1 touch, 2 touch, it kept going, and then retested it again. So if you count 1 touch, 2 touch, 3 tests. No, sorry, 3 touch. So that told me, all right, if we get a bounce on that support, a bounce on that 200-day moving average again, the likelihood is, if it comes down to 200-day moving average again, the likelihood is going to bounce because we already have 1, 2, 3 right there. So that just tells me it's a strong support and it's a strong resistance, right? And this is what happened over here. So I entered the trade right in here, right? So you guys can see right there, right? So I was watching, paying attention to it, and then I had gave our guys, our members, a heads up. I'm looking at Tesla. So this is when I told them I was looking at the Tesla right here for a call because I was looking to play the bounce, right there. And then that's when I said, now I'm looking at for a possible bounce here in a 200-day SMA. So I gave a heads up on this because that's what I was looking at just based on just that price action, right? So this was on the 13th. Let's see, just check. So you guys, date the 10th. All right, so let's go to the 10th. Let's go to the 10th. 10th. 14th. There it is. Yeah. There it is right here. So ended up making 35% on this just because I literally just caught the bounce, right? And this was right here, right? This was right here. I just literally, all I did was I could have gotten in originally, right? But I knew it was going to come back and retest, and I didn't. So I said patient pays, right? It came back right here, it bounced. I got in over here, and it took off. It took off. It took off. So that was a perfect play in terms of playing the bounce right here. As you guys can see, I was excited, very turned up, very hyped. All right. All right. Let me see. Is it just you? Can you guys, the rest of you guys hear me? Just want to make sure because somebody just wrote his audio is not working. Just want to make sure it's just an isolated incident. It's not everyone. All right, perfect. You guys can hear me? All right, awesome. Okay. All right, so it's just an isolated incident. All right. Right. So that was the 200-day moving average, right? And for you guys that are new and not familiar with it, this is my Discord server, right? So this is where I send out signals, right? And as I send out the signals, just like I'm teaching you guys on here, literally as I send out signals, I teach my guys literally everything that I'm doing, why I'm getting into these trades, and I let them know in advance the prices of the contracts before I get into it. So therefore, giving them a heads up so they can get into the trades with me, right? And then when it comes time, I'll come in here and I'll send out the signal, right? And then every signal that I send, I make sure that it's affordable. It's less than $130 per contract because one option contract equals 100 shares. So that means you multiply this by 100. That gives you the true cost of your contract. So this would be $88, right? So $88, $108, $92, $110. That would be the cost of these contracts, right? And after I send out the signal, I come in here, I give an update, everything that's happening, play by play. Like for example, this was the Tesla play I sent out yesterday, right? So I sent out 88 cents, literally, so pretty much it just lets you know what's happening and when you should be closing it and leaving a trail stop, when you should be taking your profit. And I'm going to do a quick scroll for those that are on YouTube or those that are first time seeing it. Win rate is over 92%. The last 28 trades, I've won 26 out of 28. I've had 2 losses. I'm going to scroll for you guys to see it. So this was a loss right here. Right. So no, sorry, this is a win. Sorry, 37%. Right. And most time, because for day trading, I try to get in and out. all within 10 minutes, 5 to 10 minutes. So like, for example, it says 9:54. I was out of this trade, I think by, so is it not showing me? Yeah, right here, 10 o'clock, right? So this was about a 6-minute trade. Before I get into any of these trades, I have a game plan coming into the day. I know what my prices are for calls or puts, and I send it out to everyone, right? So you guys know it in advance. And then from there, a quick scroll for you guys to see. All right, so this was the first of the 2 losses that I had right here. Losses do come with it. It happens. If you can't afford to take a loss, what I tell everyone, do not trade. Do not trade. And then I am never afraid to show my losses because that's part of trading, right? And then, but we win a lot more. Just quick scrolls for you guys to see. This was the second loss right here, 20%. And then I did a webinar before and on risk management as well. So that's something I'll do later on in time. All right, so quickly show you guys more wins, 31%, 20%. All right, and then for those that are on YouTube, I'll leave the link below so you guys can join. Right here, 35%, 36%, 19%. All right, here it keeps going. Keep going. Yep. And this was the other loss, February 21st. Right. But yeah, so pretty much 26 out of 28 trades. And then just been profitable from literally. It's very easy. Very easy. But this is why I'm showing you guys, right? So let's get back to it. Right. And then let me share the screen again. All right. So we're back in moving average. Can you guys see the moving average screen? Give me a quick yes before I get into the next slide. All right, awesome. Okay, so let's get to the next slide, right? So next thing that we have, the MACD, right? So this is the next thing that I use, the MACD, right? So the MACD, what it stands for is the moving average convergence divergence, right? But it goes by MACD, right? So it's a momentum indicator. It shows the relationship between the 2 moving averages, the 12 EMA and then the 26 EMA. Right. So it's used to be able to identify future trends, right? And I'll show you exactly how that works. So it used to be able to identify future trends in the market, right? So it's made up of the MACD line, the signal line. So the MACD line, it's normally the 12 EMA, and then the signal line is normally the 26 EMA. And then you have the histogram, which represents the difference between the signal line and the MACD, and I'll show you as well. So the bigger the histogram, that means the stronger the momentum, right? And the smaller the histogram, the weaker the momentum, right? And then it's the space between the signal line and the MACD. And I'm going to show you that as well. And then let's pull it up. Right. You guys see the charts real quickly? Yes. Give me a thumbs up. Yes, if you can. All right. Perfect. Thank you, guys. All right. So I'm going to make it bigger so you can see exactly what it is. Right. So this is your MACD right here. So the MACD line is normally the blue. This will be a blue, right? It's the top. And then the signal line is right here. This is your histogram, right? This is your histogram, right? And this is the 0 line right here. This is the 0 line right here, right? This is your 0 line. So the further apart they are from each other, the bigger you'll see the histogram, right? The further apart, the bigger you'll see the histogram, right? So when it crosses, what you want to look for, right? You want to look for the MACD to cross the signal line going down, right? So when it's above here, that will signify a change in the trend. We're getting ready to get a downtrend. So this will signify a downtrend, right? If you guys notice right here, let me make it bigger. Take a look right here, right? Take a look at this downtrend, right? So SPY went from 402 to 391, right? So you can tell the trend was getting ready to change up here, right? Once you see the cross, when it's above, you want to enter it. You want to look at getting it from up here, right? You want to look at getting it from up here because this right here will give you the signal, right? And you want to try to get it up on top when it's above the zero line. When it's above the zero line, right? So one of the things I love to use the MACD on is for swing trading. So I like to look at the 4-hour and then the daily using the MACD, right? I still use it in the 1 minute and the 5 minute because regularly, anytime that I trade, I'll have two screens right here on my main desktop, right? With the 1 minute, the 5 minute, and then the other screens, you're looking at the 1 hour, the 4 hour, and then I'm looking at the different indexes, right? And then the option chain and all that stuff. But the main thing, right, for this, if you really want to see big moves, you want to take a look at the daily, right? Because you'll get bigger moves with that. You'll be able to see bigger trends with it, right? So like, for example, like right here, you notice right here, right? This is when you started getting a big trend coming to the downside. All right, let's fix it. Like right around here, right? See that cross, and that's when it started coming down, right? So it's used to identify future trends. And then to get in it, like I would get in here for puts, remember kind of you want to buy low, sell high, and then same thing up high. You want to, for when it comes to put, buy it with the price is high so it can come down. You make some money for puts, right? Unless you're playing continuation of a break of support, right? So as you can see here, right, the MACD crosses the signal line right here going up while it's underneath. That tells you there's a change in the trend. And as you can see here, the change in the trend, it starts going up, right? So it's a lot easier on the bigger time frame. When you'll run into issues with this, when you have a choppy market, so it'll get very hard to figure out the price action. So when you have a choppy market, right, when the price action is challenging, right, it'll be so close to each other. You'll get literally, it'll be very misleading. So you want it to be in the bigger time frames. You want it to be when the price action is good. You don't want to use it if it's too choppy because it's going to be very misleading. But if there's less chop, there's not really any chop, it's one of the better indicators to use with finding the right setups. As you guys can see here, right? If you take a look, these wild swings, literally, right? Just like this, go up, down. It tells you when it's getting ready to be a big change in the price action, right? So I'm going to share the screen again. All right, let's go into the next one now. Okay, so the RSI, that's the next indicator that I use, right? The RSI, it's a momentum oscillator, just like what I was telling you guys. The oscillators are the ones that you see at the bottom, the MACD, those oscillators, and the overlays are what's in the chart. So this measures the speed and then the change in the price movements. So measures the speed and change of price movements, right? So one of the things that I love using the RSI for, and I use it on all time frames. The RSI, you can use it in every time frame. It works great at. Right? It depends on what you're trading. If you're trading the 1 minute, the 5 minute for day trades, if you're doing swing trade, bigger time frames, the 1 hour, 4 hour, the daily, you can use it as well. So it's great in all time frames, right? So I like to use it anytime that it crosses above 70, right? That means to prepare for a move to the downside. That means it's overbought. So if it gets over 70, that's overbought. Below 30 or below, that's oversold, right? That means prepare for a move to the upside. Prepare for a move to the upside, right? So it's a change in direction, a change in the price action, right? Let me share my screen so you can see. All right, so yeah. So this is the RSI right here, right? Let's bring it up. RSI. So if you notice right here, right, oversold, right? Anytime that it's oversold, prepare for a move to the upside. That doesn't mean it's going to happen instantly, right? It's just be ready for it. You're going to start to see a move to the upside. Anytime that it comes to oversold, prepare for a move to the upside. Prepare for a move to the upside, right? Let's go in a 1 hour time frame so you can see. Right? So like today, right? The market closed oversold. So that means prepare for a move to the upside, right? Prepare for a move to the upside, right? Let me show you different time frame, right? And then above 70, this is the 70 line. Above the 70 line, prepare for a move to the downside. So the thing about it is, it doesn't mean it's going to happen instantly. It just means prepare for it. That means you're going to get a change in the price action, a change in the direction. This is what I like to use, right? In conjunction with a couple other things to find reversals in the market, right? To find reversals in the market, right? To change in the price action, change in momentum, right? This, right? Or this. And you can pair them together to find bullish divergence, bearish divergence, a bunch of different things where, you can literally use it together to find great setups, right? But above 70, you want to look for the price action for a change in the price action. So I'm going to show you guys. Right. So when it's that low, right? I'm just going to go real quickly. Yes, before I switch, right? When it drops that low, right? This was on Monday, right? When it drops this low, right? So this is why I say prepare. That doesn't mean it happens instantly. But normally this follows by a big move to the upside. Normally this follows by a big move to the upside. So this had dropped to 385, all right? It got up to 389, right? Or when it was over here, 385 right here, it worked its way back up to 385, all right? Came back down, right? And then back up to 389, all right? So anytime you see this, prepare, get ready for some calls, right? But something else to take in consideration, and we spoke about it in prior webinars, right? Looking for main supports for bounce areas, right? Support and resistance trends, right? So therefore, it'll tell you, literally, you'll be able to know when you should be getting in, right? But this is definitely something that I use regularly, the 1 minute and the 5 minute, right? And I'm going to show you something, because anytime that I get ready to take profits, I always tell everyone, all right, if it's overbought or it's oversold, you can always hold it longer. I'm going to show you. Let me share this. All right. So like, for example, right here, I was up like 36% on that Tesla call, right? So it was overbought, right? So because it was overbought, when it's overbought, there's still room to go, right? There's still a little bit of room to go, because you never know. It can run up, right? It can run up. That's why you want to use your support and resistance. You just don't only want to count on one thing, but you just kind of have to use these and understand the price action. So therefore, you can be able to make the best decision, right? So something that you always see me do is anytime that it starts to get overbought or oversold, I'll say to leave a trail stop. That means we can get a change in the price action. We get a change in the direction, right? That means you can get a change in the direction. So you'll see me say, leave a trail stop. So let me go jump back to down. So you can see, so like right here, right? So I had got into Tesla yesterday, right? And it was overbought. Same thing. I told everybody right here, it has room to go, but now overbought. This is where you want to leave a trail stop, right? That means prepare for a move to literally to the downside, right? Same thing. This one right here was oversold, right? Was oversold. So I told everybody to take it and leave a trail stop. So that doesn't mean it's going to happen right then and there, right? It does not mean it's going to happen right then and get in there. It just prepare for a move prepare for the price action to change direction, because it's very overbought and it's very oversold, right? Buyers have to take profits. Sellers have to take their profits. They're not going to just hold it forever. They have to close out, right? And then for them to close out, that means they're taking their profits, right? So that's why it's important. You want to be able to kind of, all right, let me get out. All right, let me take it now. Let me not ride it for too long, because what's going to happen is the price action can change so fast where you'll lose your money. And you don't want that to happen, right? And so this is a common thing. Anytime that I see it overbought or oversold, I will always let you know. And then when trail stop, for those that don't know what a trail stop is, it guarantees you profit. So therefore, anytime that you're in a trade, say if you enter that trade at $1, which is $100, because one option contract equals 100 shares, right? And then the stock is at $1.25. That means you're up 25%, right? So you would set a trail stop at like $1.20, so -10. That means automatically, if that stock were to start going down and it hits $1.20 in contract price, it will exit, automatically fill your contract for profit for you at 20%. Right. So that's something you should use regularly, something that I use regularly. Right. And I'll let you know all the time. All right. And then I'm going to show you some more. Right. Where else? Let's keep going. Let's see. Where else did I use it? Right here, overbought. So I use this regularly. This is what I'm talking about. I use it regularly. Overbought right here. Leave a trail stop if holding. Right. And I can go on for days. And all right. And all the times I use it. Right. And then these are examples in the server. Right. These are examples in the server. Let me show the prices for you guys, just in case if you've never seen it before. All right. So for those that are on YouTube, right, you can get in the server for free with the link I'll leave down in the description. And also don't forget to subscribe. I'll post this video, right, along with the other videos. You can see it in the educational videos right here, this channel. Right. Once you get in the server, you'll have access. I'm going to post this video in here as well for you guys. All right. And then which is the webinar, which I'm on now, that I'm doing. Right. And then the watch list pre-market. Every morning I send out the watch. This is all for free for you guys. And then for those that want more help, because I try to give literally as much game as possible, as much education as possible. For those that need more help, you can schedule a one-on-one coaching call, and that is $110, right? And there's a couple people I recently did it with as well. So shout out to you guys, right? So it's $110. We'll go more in depth. Anything else you feel you don't understand that I cover, or just whether it's long-term investing, options trading, setting up for your retirement, all these different things, we'll go over it more in depth, right? And then for those that want to get the alerts, you'll have access. All you have to do, click on this, it'll bring you to this page, right? And you can do a 7-day free trial and see it for yourself, or you can do the monthly subscription, which is $39.95, or the yearly subscription, which is $349.99. It's $130 savings, right? And then once you sign up, you'll get access to everything, but you're going to get 2 emails. The first email is going to be a receipt. The second email is going to be the link to this server, right? The link to the server. Make sure you authorize the memberful bot so you can get full access to everything. And then what I would recommend, once you get in here, go through the beginner's guide just to understand some basics, right? And when I send out the signal, so you can really understand, like, for example, we buy calls, right? Never buy at the bid. So I literally, like, most commonly asked things that you should know that'll make it very easy for you. And along with how the server works, so therefore you can understand how I send the signals, just so therefore you can be set up for success, right? And then, like I was saying a little bit earlier, every morning I give you literally all my prices that I plan on entering these signals, these trades in, right? When I send it out, I also give you a little breakdown of what the price action looks like. So therefore you can know in advance, right? So like, for example, today was Fed day. I did not trade today. Why? Because the price action was all over the place. There's lower liquidity, lower volume. Therefore, I did not want to risk, right? So everything is there for you guys, okay? And then after that, that's funny. Somebody put it's definitely worth it. Paid for my subscription within the first 2 trades. Shout out to you. Thank you. That's funny. Thank you. It's good to hear. All right. For those that are on YouTube, so she wrote, you can't see it, but it says it's definitely worth it. Paid for my subscription within the first 2 trades. Right. So I try to walk everybody through and hold everyone's hand. I do a step-by-step analysis. So pretty much just like I'm educating you on this call, I educate you as I am trading, so therefore you can understand, because the goal is for you to become financially independent, to be able to trade for yourself. As nice as it is that, you know, you guys subscribe and do all that stuff, right? But at the end of the day, this is a skill that you can use for the rest of your life, and this what's changed my life. I'm a full-time trader, right? And this is all I do, right? I don't work for anybody. I'm my own boss. So the way you can do the same thing, right? And if you think about it, right? For example, like the hourly wage for the US is $11 an hour, national average, right? $11 an hour national average for the US, right? If you do a full 40 hours a week, that's $440. That's $21,100 a year right there, right? So if you trade, it's 250 trading days in a year, right? 100, literally, if you make $100 a day, of trading, that's $25,000 a year. You're already beating it. All right. So let's get back. I'm gonna share my screen and then holding I see a couple people raising their hands. I'm going to answer your questions at the end. All right. For those raising their hands, I'm going to answer your questions at the end. Just make sure you stay on mute and then I'll answer your questions at the end. All right. So I'm going to share my screen again. All right. Let's see. All right. So now the last thing that you'll see, or the next thing that you'll see on my chart is candles, volume candles, right? Can you guys see it? Can you guys see my screen right now?
Yes.
All right, awesome. So you'll see the volume candles, right? So volume is one of, if not the most important thing when it comes to options trading. And I cannot stress how important that is, right? One, you want to trade stocks that have high volume. Why? Because that's what's moving the market. You're going to get a better price action. The stock is going to move faster. That's how I'm able to get in these trades and make money within 5 or 10 minutes. Because if there's lower volume, that means it's going to take me longer to make money on that trade, right? So therefore, you want to make sure, right? You want to make sure that you're in trades that have high volume, right? And the way that you can see the volume, I'm going to kind of show you guys a couple of tips, right? I'm going to share a couple ways you can monitor volume. All right, so let's bring this down. It can be confusing, guys, but once you understand it, it's like very easy. You'll see. Right now, everything probably looks confusing because there's so many different things in there. It looks like spaghettis, look like there's a lot going on, but you'll understand it over time. You just got to get used to it and you'll be able to kind of see what I'm talking about. All right, so let's use NVDA, all right, because NVDA had some really great volume today. So I'm just going to show you guys. NVDA is one of my regular stocks that I trade, right? So these literally, I trade NVDA about every day, right? So this is your volume candles down here. So volume candles, well, volume in general, all it is the amount of shares or the amount of contracts that's being traded, right? Amount of contracts is being traded, right? This is your volume candles right here, right? So you want to find, if you're going to get in the calls, right? You do not want to get in calls if there's low volume, right? You do not want, so right here, if you notice, the volume is not high, right? The volume is not high. Going back, right? You can go back, right? So when it's low volume, you get sideways price action. You get sideways price action. With high volume, right? You'll get more precise. You'll get stronger price action. So like right here, we have ascending volume, right? Rising volume right here is going up. So like, for example, say if I were to get, I would perfectly look to get in for calls. Why? Because we have volume going up, right? We have volume going up right here. We have volume going up, right? Volume going up. Because if you notice right here, volume going up, right? So this right here, I always monitor the volume, and depending on what time frame, you can 1 minute will show you the 1 minute volume candles. 5 minutes will show you the 5 minute volume candles, right? So it all varies depending on what time frame you're looking at, what time frame you're looking to trade, and will tell you how much volume there is. It will tell you how much volume there is. I'm going to show you guys a couple examples, right, where I use the volume to make money. Yeah, so let's scroll. Let's go back down. Let's scroll back up. Right here. So this was Tesla, right? This was yesterday. I saw ascending volume. This was at 9:57. I saw the volume was picking up, right? So volume represents buying pressure. That means buyers are stepping in. Buyers are stepping in, right? When you see red candles, that means if you see a lot of them, that means sellers are stepping in, right? That's selling pressure, right? So this was rising volume. So that means the volume is picking up. The volume is picking up, right? Volume is picking up. It did right here. This was Tesla. As the volume was picking up, it was going up. As the volume was picking up, it was going up, right? So like I even wrote it too. Reason why I got in Tesla, we had ascending volume, right? And I had taught this in the last week as well, going over that as well. So this is something that I use regularly, right? Ascending volume, right? Let's see if I can find another one for you guys. All right, so this was a put that I believe I got in. Actually, no, I did not get in. I did not get in that one. Yep, this one I got in right here. Good volume. All right, I got into some call. Let me see if I got another one I can find. But pretty much, I'll look for at the bottom, look for the bottom candles, right? Let me just kind of want to share that back again so you can see. Right? So you want to see like this right here gives you the average where the volume has been trading the average for that time frame. But you want to look to see, all right, are we above that? Are we staying above that? What's happening, right? What's happening, right? And you can see the volume is holding up strong. If you're starting to see red candles in here, that means the strength is not there. That means sellers are stepping in, right? But if you're seeing consecutive green candles on that time frame, so this is the 5 minute, so that means buyers have been in control from this time to this time. That's a positive. That's a positive. That means the stock is doing decent, right? You want to look for high rising volume, right? And then as you can see right here for puts, right here, sellers stepped in. You see rising volume for puts. Sellers stepped in, rising volume, right? Rising volume, right? All there for you guys, right? And that's what you want to use. So therefore, whether it's calls or puts, calls, look for rising. You want to look for the green candles. Puts, you want to look for the red candles. All right. Red candles, buying pressure. All right. Let me share again. All right. And then I went over that one. Yeah, and that's pretty much it. So I'm going to answer some questions for you guys, right? The next 10 minutes or so. Answer some questions. Let's see. So you guys, if you guys have any questions, type it in or ask me right now. Let's see. How do you pick your watch list? First question. So all based in volume, right? I'm going to show you something, right? How do I pick my watch list? I'm going to share, right? I'm going to show the most simple way to pick your watch list. Let's go back to Google. All right, so let's show you how, right? So I'm going to pull this up for you, right? So this was the market today, very ugly, right? If you don't know what to pick for your watch list, literally, you want to look for these right here. These are what holds the S&P, the biggest portion of the S&P 500. These have the most volume. Amazon, Tesla, right? So anytime that I do my watch list, right, they have the most volume. So being that they have the most volume, you'll see me trade these regularly. You'll see me do it on my watch list. I'm going to show you again, right? And then this right here, these are your techs. These are this is the NASDAQ. This is the QQQs right here, the Qs right here, right? QQQ, that's the NASDAQ, right? So big cap stocks, high value, Apple, Microsoft, NVDA. And what you want to do, you want to pick about 5 stocks, right? Pick about 5 stocks, right? And then stick with those 5 stocks because you'll start to see repetitive price action. You'll start to see repetitive price action, right? So find a couple stocks, stick with those stocks, and you'll see repetitive price action, right? And then you'll see the most volume. The other way, I'm going to share it again. Hold on. Right. So the other thing you can do, right, to find volume, if you go to barchart.com, right, if you go to options, all right, and this one is for free, all right, and you click on most active options, it'll tell you what the volume is. So something that you'll see me do every time in the server, I'll let you know when there's low volume or high volume, right? And this is what I mean when there's good volume. Like for example, Tesla, 2 million in volume, NVDA, 1.4 million in volume, right? So you'll be able to see but to call ratio, it'll tell you literally what the average volume is during that time. This is normally when there's good volume in the market, right? This is what literally you'll see, right? So I'm going to show you when there's bad volume so you can see the difference. Look at that. All right, so let's see. I'm going to give you an example of a bad volume. Right, so right here. So, right, remember, good volume, you'll see over 1 million, 2 million, over 600, 700,000. This right here. So this was, I believe, this was yesterday. This was yesterday. And this was at 10:13. This was in preparation for the Fed day, for Fed meeting today. Right. This is how low the volume was, 134,000. 134,000 in comparison to after the Fed chair spoke later on from 3 to 4, where the volume picked up, right, to 2 million, 1 million, 700,000. Literally, the lowest one was 166,000 versus, versus 134,000, 95,000. So Apple was the only stock yesterday morning at 10:15 that was trading with over 100,000 volume, literally, right? So you have to be able to monitor the volume, because if there's low volume, you're not going to get concise. You're not going to get clearer confirmation of the price action. It's going to move sideways, right? So there's very low liquidity, right? So because there was low volume, right, I couldn't really get into anything because I need volume for the stock to be able to move. If not, then it's going to be stuck. It's going to be a slow price action where you're going to get a lot of choppiness, right? You're going to get a lot of choppiness. You're going to get a lot of sideways movement. So you got to wait for the volume pickup. And then once the volume pickup, you can tell by looking at the candles that I shared with you guys, right? The candles right at the bottom, right? You'll wait. I'll always say I'm waiting for a volume spike. I'm waiting for the volume to pick up. When I say I'm waiting for a volume spike, I'm waiting for the volume to pick up. So say if the volume is like right here, right? I'm waiting for the volume to get over here. Mind you, you can still trade. It's just in terms of the probability that you have of winning that trade, right? Your chances increases when you have better volume, and the contract prices are going to be tighter. Because if there's less volume, the spreads, the ask and the bid are going to be further apart. And you want the spreads to be tight bids, right? And for those who don't know what I'm talking about in terms of bids, let me share it real quickly for you can see. I'm going to share it. All right, so, right. So when there's good volume, right, you can check it on the thinkorswim platform. All you got to do if you're in your desktop, at the bottom, it'll tell you the total volume that's currently being traded. It'll have it there for you to see, right? But more importantly, if you go into the options chain, right, this is the expiration date, right? So this is the option chain. This is the expiration date. We're looking at NVDA, right? This is the TD Ameritrade thinkorswim platform, by the way. Left side, we have calls, right side puts, and the middle is the strike price. So you want the spreads to be tight with each other, right? You want the spreads to be tight with each other, because the volume, that's what's going to help. Because if there's not enough volume, right, you're not going to have tight spreads. And on top of that, you're not going to have buyers, right? You're not going to have sellers. For every time you sell a contract, there needs to be somebody in the opposite side. It's like here, 77,000 volume, 16,000. Granted, the market is closed right now, so tomorrow you'll see what's truly active, right? But for every time you sell something, there needs to be somebody in the opposite side to buy. If there's not enough volume, you're not going to have any buyers, so your contract is going to end up expiring worthless. All right, any more questions? All right, so if you have any more questions, type it in the chat. If not, then I'm going to head out. Are you guys good? All right. So let's see. All right. So with that being said, all right. Let's see. Oh, is somebody asking a question?
Fancy how.
What's your question?
What charts you use?
What charts?
Yeah, I just got in like 15 minutes ago. I missed it.
Okay, so I use the 1 minute, the 5 minute for day trading, plus the 1 hour, and then for swing trading, the 1 hour, the 4 hour, and then the daily chart on the 1 year.
Day trade.
So for day trading, that means I'm in and out of the trade within the day. So I'm gonna right. So like for example, right,
Mhm.
1 minute and 5 minutes, right? So I'm trying to get out fast. So day trading is when you buy that contract in the
Uh-huh.
same day when the market opens and you sell it before the market closes, right? So let me
Right.
show you an example real quickly. So
I'm
like,
actually trying to do that myself.
yeah, so like for example, right? So like for example, I got into this trade right here,
Mhm.
right? Let's go to profits, right? So I'm gonna just look at the time frame for you so you can see, right? I'm gonna count the time frames, right? So let's scroll to the bottom for you, right? So like this was 10 a.m. This was yesterday. I got in at 10 a.m. and I got out of the trade at 10:04. That was 4 minutes. And that was because I was using the 1 minute time frame and then the
Right.
4 minute time frame. So that's considered day trading, right? So being that I'm looking to get in and out within a smaller time frame, I'm going to use a smaller time to look at it. Does that make
Right.
sense?
Yep.
Okay. And then say if I was swing trading, then I'll be looking at a bigger time frame. But also there are times where I'll use the 1 hour because to look for bigger breakouts, right? So major supports, a resistance, right? In conjunction with looking at the 1 minute and the 5 minute to see if I see any similarities. But day
Right.
trading all within the same time frame. So even this right here, 9:46, I got out at 9:50, 4 minutes. Right.
Did
So
you
that so
did you say that you use Trading View?
no, this is the TD Ameritrade Thinkorswim platform. TD
Uh,
Ameritrade Thinkorswim platform. So for those that are in the US, right, I recommend using TD Ameritrade Thinkorswim platform. You'll be able to get in and out of trades faster, better order execution, and then they have all of the options chain because there are some brokers like TradingView is great for the charts. And I believe, I don't know if they still do the same thing because I used to use TradingView back in the days where you needed a minimum of $5,000 just to have an active account, right? Versus TD Ameritrade, you can start with $100, $50, $200, there's no minimum to start and it's free to join.
oh, really?
Yeah. So just make sure if you have less than $25,000 and that you're going to be depositing your account when you open it to use a cash account. So therefore you don't get flagged as a pattern day trader. That's if you do 3 or more day trades in a 5 business day period, you would
Uh-huh.
get flagged as a pattern day trader. Therefore you would be suspended from trading for 90 days.
Uh,
All right. So just make sure, and then you should be good. All right. Any more questions, guys?
Yeah, can you repeat that?
Which one? Which part?
A part of the being suspended.
Yes.
Does TD Ameritrade do that?
That's all brokerage. That's just standard SEC FINRA rules. That's all brokerage. They do that.
Okay, so how do you avoid
So
getting
you
suspended?
so you avoid that by opening a cash account. So when you open your account,
Oh, okay.
so like with TD Ameritrade, you'll have two options: a margins account or a cash account. A margins account, right, which is nothing's wrong with it. However, a margin is borrowed money. That means
Right.
you're using the bank, you're even using that broker's money, right? But that doesn't mean you have to necessarily use it. You have it at your disposal. Depending on how much money you have in your account, they'll normally like match it with a certain amount, right? However, because you're using a margins account, it limits you from being able to do day trades of being able to get into 3 or more day trades, right? Because if you get into a trade, like for example, when the market open at 9:30, if you get into that trade, right, and then you close that trade before the market closed from 9:30 to 4 p.m., the times of the market being open, right, Eastern Standard Time, that's considered a day trade. So now if you do the same thing tomorrow and you do the same thing on Friday, you're going to get flagged as a pattern day trader.
Got it. With
And
the
then
margin.
that's yes, correct.
Yeah.
So if you have a cash account, you don't have to worry about that. The only thing you have to take in consideration is your cash to settle. So that means if you have $1,000, right, and then you use $200 today, and of that $1,000, you'll have $800 left in that same day. So
Until
you
the money
can't
settles.
exactly, you can't reuse it, and it settles in 24 hours. So you can't reuse the same thing. So another example, if you have $10,000 and you use $3,000 in the morning to trade, that means you'll have $7,000 for the rest of the day to use. And then the following day, then your money will get settled and you should be good to go.
In the chart, I have another question. In the chart where the volume, when do you feel it's a good bet to trade that option?
So
at what point?
So
I see
go ahead.
yeah.
So
But no, go ahead.
so before getting to the volume, right? So I already have my spots marked down because I already have a game plan for the day. I'm just waiting for one of those things to occur within those prices. Because if you look at the prior price action, whether it's pre-market, the prior day or prior week, so anytime that I do whether it's my watch list, right? Anytime that I prep for the day, right? I studied the pre-market price action. I studied the prior day price action, and I studied the prior week price action. I look to see what do I see that's common, that I see that it's happening often, and then at what prices are that happening. So therefore, say if I see a spot that is high in resistance, at O's in resistance, that means the likelihood is you're going to have selling pressure come in around that price. That means sellers are going to come in. So therefore, you're going to start to see those red candles. Versus if I see a spot that's normally a bounce spot, right? You can see that that's where the buyers are going to step in. There's other ways and other things you can use, but that's going to get too technical and too in depth, right? And then it's going to get lost in the shuffle. But as you get experience, you'll be able to kind of add other things there. But in terms of keeping it as simple as possible, you want to look to see if there's buying pressure. So, like for example, right, I didn't trade today because of Fed Day. However, the top two things that were on my watch list, the top thing that was on my watch list today was NVDA. I wanted to trade, right? If it wasn't the Fed Day, I would have traded NVDA, right? Based on NVDA's prior price action yesterday, the week, right? I knew NVDA had a lot of things going for it. And on top of that, I knew they had spoke about the new AI thing they're starting to integrate with the microchips, right? So I'm like, okay, so there's a lot that's happening. So that tells me there's going to be a lot of buyers is going to be very interested, right? So I look for the prior yesterday's price action. I looked at last week leading up to yesterday, the pre-market price action, and in pre-market, right? So this was this morning in pre-market, right? The market was mixed all over the place. But if you notice, NVDA still had good volume in pre-market, right? The price action was good right here, right? So therefore, going into it, I know we're going to get some good volume to come in. And then if you notice, the market ended up being very crappy. It was bloody, right? But NVDA still did well. Those microchips still did well, right? And then that's because buyers stepped in. Let me share this screen and see. Right, so buyers stepped in, right? Let's go into I'm going to show you when the market opened the first 5 minutes. All right, so you can see. All right, so if you can see right here, right? If you see the candle, you'll see the candles. You'll see the candles. All right.
Yeah.
You see the candles. You'll see the candles. Like right here, you want to look for these green candles. You want to look for high green candles. That's what you want to look for. You want to look for consecutive green candles. If you start seeing red candles, that means there's selling pressure. Sellers have stepped in, right? And also, too, the other thing, right? Because you said, how can I tell, right?
Yeah.
For example, last week, I went over trend line. So something I would have used, say if I did trade today, I would have used the trend line because if all I would have done was draw a trend line here, boom, this would have told me exactly what's happening. Take a look right here. And if you look at you see right here, selling pressure. It's simple as that. So all I would have done, I would have gotten some puts, boom, and use that right there. That easy money.
Yeah, it aligns with okay, I get it. I see it.
Is it? So selling pressure, candles, trend lines. This was the last webinar that I did last week, right? For the guys that was on there, this is what I literally went over and taught you guys. Does that make sense?
And and you went over some of the patterns.
Correct. Yes, I will cover the patterns that I use regularly, whether it's bull flag, bear flags, right? So let me share it. All right, and then we'll give you a quick glimpse on what they look like, so you can understand. Right. So let's go to the server. Right. So like bull flags, bear flags. So like right here. Right. So this was a bear flag setting up. Right. It ended up dropping. So this right here was when I said the candles. This right here, all I would, if you drew a trend line right here, I actually caught one in the trend line in volume as well. I want to show up. It's somewhere around here. Let's see. It should be. So this was a bear flag. So this was one of the patterns right here, bear flag. Right. So when you have a strong downward trend and they'll bounce off the support, the bottom of the channel and move sideways. Right.
And you set your support off of the
pre-market price action,
Mhm.
the following day price action, and then the price action leading up to it. So I'm looking at literally. So I'm just so even though these trades they last about 5 minutes, it takes about 2 to 3 hours in preparation. People don't see
Right.
that. So it's a lot that goes into it, right?
Okay.
The easy
Okay.
part is the easiest thing is getting into the trade. Just like I was able to identify a quick trend for you. This is why I want to get into puts. It's the easiest thing because you'll be able to identify it and see it. Just like I had NVDA for possible puts, right? So I know automatically when those prices around there, this is what I'm going to get. This is going to happen, right? So
Right.
you'll be able to see that.
Okay.
Does that make sense?
Yes, it does.
All right.
Yeah,
So this is what I was talking about right here. So if you look right here, right, this told me I would. This is you're looking at. Was about a 273 to 270. It's a $3 move right there. A $3 move. And you can also, if you look at the MACD, you'll be able to see the change in the price action. Right. So right here, this is right here. All right. So let me bring this smaller so you can see.
Yeah, I don't know what a MACD is.
So this is what we went over a little bit, right? So if you see, right, the MACD, you get across right here. Across right here. So that means we're going to get a little bit of change in the trend, right? So if literally you've known where to get into the puts, right? Or the other thing was to use the RSI, and you would have seen that the RSI was overbought. So that means prepare for a move to the downside. So literally we just went over, right? So this is what happened right here. I moved to the downside. So this right here, I would have been waiting. All right, we're going to get a move to the downside. Why? Because it's overbought on the RSI. And right here, we got a cross, right, above the signal line of the right here going down. And the volume selling pressure came in. So we had buying pressure when it shot up, and now selling pressure came in.
So the MACD and the RSI, those are trend lines that you set?
Yeah, so I use those to identify the trend of the stock.
Got it.
So therefore, that will let me know if this is a downward trend, it's a bearish pattern, if it's moving downward. So therefore, to get into puts, it tells me, all right, if we're getting a change in the price action to get into calls, it lets me know in advance. And that's how I'm able to kind of let everyone know, all right, this is what I'm looking for. This is what I'm getting ready to get in. So therefore, you know it in advance because I'm seeing all of it in advance by just looking at the indicators along with the price action. And then if you don't understand, just like I always said, if you're in our server, I'm going to show you. I'll explain anytime that I get in trade, I'll literally explain everything for you. So therefore you can understand and backtrack it for yourself, right? So you can understand right here. So like, for example, this right here, I was looking for a bear flag, right? Let me show you before that. So I was looking for a bear flag. This was the 5 minute and this was the 1 minute, right? And a bear flag was you have a strong downtrend and the price action drop. However, it's stuck within this range and didn't move, right? It started getting choppy. But what I noticed was on the MACD, we didn't have any crossovers. So therefore, I didn't want to rush because we didn't have a change in the price action. And then the volume was pretty much even. So it was even for calls, even for puts for buyers and sellers. So that tells me that's not a good setup. When you have candles like this, you get a move to the upside. All right, this is a good setup. And support and resistance tells you you're getting a good setup. Any more questions, guys?
Are you considered a day trader?
I'm considered a trader, somebody that makes money in the market. So depending on what the market gives me, that's what I take. That's what I take. All right.
Well, Gotcha. I mean, but you don't have to worry about getting kicked out for 90 days. What do you sign up to be a day trader? Is that how that works?
No, you just, once you sign up, you can day trade, you can swing trade. You'll have the option to do whatever you want to do. They don't ask you if you want to be a day trader or a swing trader, right? They just ask you, one, are you, well, when you sign up, I want to make it very simple and easy for you, so therefore you can get the right access, right? When you sign up, regardless of your experience, they're going to ask you some basic questions about your experience. I highly recommend, right, when you're answering these questions, this is not an exam, right? And then if you answer it the right way, you will get approved on the spot. It will be like, hey, do you have any experience options trading? Don't say no, right? Well, I would recommend not to say no, all right? And because if you don't have any experience, the likelihood of you getting approved to trade is going to be no. That means now you're going to have to prove to the broker that you can trade, because you're going to look at as a high risk. Right.
Gotcha.
So when you're filling out, just yes, they'll ask you another basic question. How many years of experience do you have? 0 to 2 years, 2 to 4 years, 6 to 8 years, 10 plus years professional. You're not a professional. You don't have to say you're a professional. All right, 2 to 4 years. Right. You've been studying or whatever it is, you know, if you don't know what to do, just watch some of my videos. Watch some of my videos. Come on webinars when I have them. Right. Watch these videos, come to the webinar. Right. All right, or if you're in the server, just read everything that I'm telling you, and you should be set. And then what you want to do is make sure that you do a cash account if your account is going to be less than $25,000, and you should be fine.
Okay, gotcha. That's the ticket right there.
You'll be fine. You'll be fine. And then the other thing too, that's fine if your account is less than 25,000, because every signal that I send, I make sure that it's affordable, a small account friendly, that it's less than $130. So like this was $92 to get into that trade. That was the cost of it. So if you want to spend $10,000, if you want to spend $5,000, just buy more contracts. All right, just buy more contracts.
How you getting those contracts so cheap?
Say that again.
Hey, can you guys hear me?
Yes, go ahead.
Yeah. So my question was, what is your take on, like, if you work, like I work a 9 to 5, unfortunately, but fortunately, but you know, I'm curious if I should just maybe try limit orders to like enter at certain levels.
Yes. So you can do that. And that is great if you can do that, right? So you want to do stop limits, right? So I'm going to show you something, right? So before I send out a signal, right, I give you a heads up on the contract price. So that means by the time I give you a heads up, normally it'll be about, I'll tell you it, and it can take up anywhere from 2 minutes to 5 minutes, right? Or more. So like, for example, yesterday, I gave the heads up at 9:52. I didn't send the signal until I think it was like 10 o'clock. I sent the signal, 9:59, so 7 minutes. So during that time, because once I'm giving you the heads up, it's so therefore you can set up. So all you want to do, if you're working, once I give you the heads up, you just go and find out that contract, right? You pull up your phone, go on TD Ameritrade Thinkorswim, and then when you get on, you type in for Tesla, you type in Tesla, and you go to the expiration date, March 24th, right? And then you look at the $205 strike, you tap it, right? That doesn't mean you're buying it right there at the spot. You tap it, right? When you tap it, right? All you want to do is just toggle it over from market or limit to stop limit. So where it'll have, right? It'll have a take profit for you, and it'll have a stop loss there for you. So once you have it set, all you're waiting for is for me to send the signal, and because you already have it pre-marked, preset. So as soon as I send the signal, you hit send, and then boom. All right. And then everything is happening within 5 minutes. So you don't have to hold it for the whole day, right? Normally from the time of 9:30 to 11 a.m., that's when it has the highest volume in the market. And as of recent, it's been 9:30 to 10:30. That's when the market will drop off, right? And then the rest of the day, it'll be like pretty much weak until like about 3 to 3:30-ish. It'll pick up a little bit, but it's not the same as the early in the morning, right? So within that time frame, if you can just buy yourself 1 or 2 minutes or 3 minutes, because normally max you'll see me in the trade is 5 minutes, 10 minutes. Like I don't even, the last time I was in the trade for 10 minutes was February 21st. That was the last Fed meeting. I got stuck in the trade. All right. So it's about 4 minutes. Like this trade was 4 minutes right here, right? 10 o'clock. Look at 10:01. I'm telling you, take like literally all you would do, you adjust it from a stop limit to a trail stop, which guarantees you. So if you're working, once you enter it, you have your stop limit, just switch it over from that, because you can go back and edit it, right? Because once you see that you're in profit, because as soon as you hit send, within the first 30 seconds, right, you'll be able to see, all right, is this trade doing well? If it's not, I'm going to give you an update, right? Within that 1 minute time frame, right? And then as soon as you start to see green, all you do, what I would recommend you do, go to adjust it to trail stop. So now it will guarantee you profit. So it doesn't turn into a loss anymore. So now it's guaranteed profit if in the event that the trade were to flip and go the opposite way. So therefore you can continue to work and it'll automatically exit it out for you.
Nice.
All right. Does that make sense?
Yeah.
All right.
I got
Go ahead.
Like you said, that call cost you $99.
Correct.
I think.
It was it was 80. Let me just go back and see. It was
80, 90.
It was $88.
Okay, so if you lost, how much do you lose?
You don't lose any more than you put in. So if I only bought one contract, that means I don't lose any more than the $88, but I can make more than that.
Okay, I mean, this sounds crazy, but like a 5-minute trade on $89, how much does that normally cash in?
Well, you can see right now. Let me show you. Right. So it all depends on how many contracts you're purchasing. So like, for example, I purchased 17 contracts over here. I made 12%. So 12%, $200, right? 180, right around there, 178 in 4 minutes.
Wow, that's good.
So for example, this one, 946, I got out at 950, 4 minutes again, right? 18%, $253, right? So I'm not, it's not a lot of time. It's a short amount of time, right? And I'm making my profit, and I'm not staying in a trade for too long. I know when a trade is bad, I'll let you know. Like, let's scroll to a trade that, say if it starts going the opposite way, I'm going to go to a trade that I was losing right here, right? I lost 8% right here. This was $85. I knew it was my exit was going into the trade. So you'll know as well. Like, for example, right here, I put $94.70. This is my sell if it doesn't hold, right? It was consolidating. It was consolidating. I already knew it literally right here. I knew this was my zone to get out. I already knew it already. If it were, so it bounced, but I knew if it came back down, if it didn't hold off this bounce, it would break. We would have a long ways to go. Does that make sense? So therefore, I already knew what my exit was going to be. So like I was good. And like now go ahead. No, go ahead.
I'm looking at your charts there. Do you make them charts yourself? You design them yourself, or are they already set in place like that?
Oh, once you had downloaded the TD Ameritrade, the thinkorswim platform, you can do whatever you want, add all those indicators, all that for you. Like you can do it yourself.
Gotcha.
You just have to go through like a tutorial and just like, and that's pretty much it. So like all these different things, right? It automatically has the candles for you. It's just, you just have to add the indicators, and that's easy to do. All you got to do is studies, go to edit studies or add studies, and you can add the indicators yourself.
Nice.
All right. Any last questions, guys, before I jump off?
Yeah, I want to know how you find those contracts cheap like that. Like when I look for contracts, I don't usually find them that cheap. They're probably usually pretty expensive.
Yeah, that's the beauty of options trading, man. That's the beauty of volume. That's the beauty of volume. So that means you're probably looking at
how do you find the same Tesla that I'm looking at for so much cheaper?
So for example, let's pull up Tesla for you. I'm gonna share,
because I was on Webull, and they got options on there as well. So but you can click on it and get as many contracts as you want and per contract, but they seem like they're pretty damn expensive.
Yes,
like a Tesla, like a Tesla contract, was over $1,000.
So a couple of things, right? We can go further in depth, like looking at the deltas and just like make it like literally like, but I'm not gonna overwhelm you with information.
Yeah, we don't got to get on the deltas and stuff, but
but what you want to look at, right? And when you scroll down, right? So one of the main things that I look for anything that's less than $130, right? And I'll look to see what has the highest volume, right? Based on what has the highest volume, normally you'll see that they have the tighter contracts. Right now the market is closed, so it's not going to show you the exact thing. But if the market were to open, right, I would know right around here, the spreads would be a lot tighter. The spread you'd be looking at this. Oh, sorry, this is NVDA. Let me put the Tesla.
So those are okay. So you're just outside in the money.
Correct.
That's where you're looking at.
Yes, you don't owe. So here's the thing, right? And I think that might be a problem right there because you're looking at exactly on the money. All right. You might just be looking at that, right? So that means you're going to have to automatically pay more. So, like, for example, Tesla's at 191. So if you're looking at Tesla at 190 or 192, you're going to get screwed automatically. And then the other thing, too, just because you get it close to end of money, it does not help you because if you notice, the spreads are further apart. You got to pay a bigger buck for it, right? But if you go a little further out, but just the right amount, right?
Yeah.
So therefore, that will give to it's where it's realistic, right? It's realistic, and you'll be able to you'll be able to get enough profits, right? Where it's
Gotcha,
reachable,
gotcha.
right? You don't want to go too far out. You don't want to be too close in because if you're
Right.
starting right there, you're not giving yourself any wiggle room. And then 20-cent spread difference, one, it's more expensive. Two, automatically, as soon as you enter that trade, you enter it being down 10, 15%.
Yeah.
So the stock has to outperform in order for you just to get back to break even. Just so you get back to break even, the stock has to outperform. And you don't want to put yourself in that predicament. So the best thing for you to do is come down to the cheaper contracts, like for Tesla, right? If I were to trade Tesla, right, I would be looking at the $200 contract right here. If you look, right, it has the most volume, but look, 3 cents apart. 3 cents apart. That means I enter automatically at 89 cents, right? And as soon as I enter at 89 cents, it goes straight to 86 cents. Versus here, I'll enter at 139 and drop down to this. So the further up, the bigger the drop you get.
Gotcha.
If you want to spend more money, all you want to do is just buy more contracts.
Yeah.
Buy more contracts.
If since you do all this trading, do you even have stocks, or do you just keep your money in the pot and day trade?
Oh, I have stocks.
I mean, I know that's crazy because I got stocks too, and I just don't never seem to make money.
So here's the you probably got it in bad prices. You probably don't. But so let me break it down for you like this, right? I long-term invest. So money that I make from day trading, I use that money, pay bills, and live my life, all the stuff, right?
Right.
Other money, out of that money, that profit that I take out regularly, whether it's bi-weekly or monthly, goes into my long-term, where it's just sitting there waiting for investing, or it goes into real estate. I have properties and stuff like that, right? So I'm using that money to buy me freedom for long-term down the line. Right now, the market is down. And that's the beauty of option trade. Even though that portfolios are bleeding, you can still make money and hedge against the market, right? By options trading. And you can still make money when the market is going well. So you have to leverage both, where you still have your long term, but you're using the money in the short term to pile up in the long term. And the reason why you don't want to get away from the long term for tax purposes, right? For tax, because anything that you hold that's less than 365 days, or say from January 1st to December 31st, if you sell it, taxes are different. You're gonna have to you pay more taxes on that, right? And I don't want to get too in depth with it because I'm not a licensed tax consultant, the CPA,
right? But
I understand the tax codes, and you can also do it under your LLC. So like there's loopholes where around it, so you can pay less in taxes that I do for myself, right? But go ahead.
Is that if you pull the money out, or
correct? So like you buying and selling. And selling, that right there, regardless if you pull it out, you get taxed. If you make a profit, you get taxed on that.
Right.
So you can get taxed from 0%, 10%, and then 20 or 37%, all depending on your income. Versus long-term, you're looking at long-term capital tax gain. And then pretty much short-term, long-term capital tax, and just make it as simple as that, right? I don't want to get too in depth with it because I'm not licensed to speak on it, right? But yeah, so you have the benefits. So you don't want to just only focus on the options trading. You still want to use long-term investing, right? As much as I love options, as much as I make money, right? I always tell them, right, to invest for the long term as well, because there are a lot that comes with that. So you can have your freedom, and you don't want to be trading for your whole life. It's a great skill. You want to use it as needed.
Right.
All right. Hopefully that answered your question.
Yeah.
Is there a limit? Is there like a PDT rule, like on regular cash accounts? Is there like anything like that with options, or can you just trade if you only have $1,000? Can you trade all of it, and
you can trade
all
of
in
it
the same day?
You can trade all of it in the same day. You can trade all of it in the same day. There's no pattern day trading if you have a cash account. The only thing you have to take in consideration is for your cash to settle. That's the only thing. For your cash need to settle.
Right. So if I have $1,000 and I use it all on my first go round and I close those trades out, I'm done for the day, right?
Correct. You gotta wait for the next day.
Correct.
Yeah.
Okay.
You gotta wait for the next day. You can't reuse what you
So
don't have.
do you recommend if you find, I mean, so if you find a good setup in the morning, go all in on that setup?
Oh, no. All right. So let me explain risk management. Do not want you to blow your account, right? So here's what you guys need to do. That's going to be the fastest way for you to lose money, right?
Yep.
Begin with the end goal in mind. What I mean by that, you want to treat options trading like your long-term investing, right? Focus on protecting your capital, not making huge, fast gain. You don't want to get rich overnight. Because like I was saying earlier, right? If you can make consistent profits, consistent gains day by day, that will add up. Like, for example, I'm just going to show you, right? Let's see. So if you look, right, with me consistently, every day, if I'm making profits, $200, $300, $400, $500 here, and every day, like, for example, like with the last 26 or 28 trades, only 2 losses, right? Those add up. If just $100 gives you $25,000, right, for the year, and you're seeing $400, $300, and you can go with a lot more, but because the market is trash right now, that's why I'm going a lot less. Versus if we had a decent market, I'll be buying over 40 contracts, but the market is trash right now. So therefore, I'm focusing more on protecting my capital. I'm not focusing on trying to be rich fast.
All right.
Okay? So what you want to do, if you have $1,000, I would recommend using about 10 to 15%, right, of your portfolio balance for each trade. In the event that a trade does not work out, you have to be okay, right? You have to be okay in the event if a trade doesn't work out, so you don't blow your account. As much as we win, as much as I win and all that, I follow rules, right? I stay disciplined.
So you're talking only buying like one contract at a time.
Yes,
if you
so you
have a
buy
small
one,
account like that.
exactly. You want to build it over time versus if that one loss, because you have a smaller account, that will decimate your account. So you want to focus on protecting your account and adding it up over time. And then also you'll have stop losses. So you're not using a small percentage, 10 to 15%, which is 100, $150, right? Or say if you decide, all right, let me just get a little bit more. Let me go $200, right? Let me just stretch it out a little bit to 20%, right? So that means you'll get 2 contracts, right? Those 2 contracts, right? In the event that the trade would have completely fell, in the event that it were to expire worthless, you don't lose more than that $200. And on top of that, it won't happen. You know why? Because you'll have a stop loss. You'll know where you should be exited. So therefore, it can be 15%, 20%. So therefore, you went from risking 20% of your account balance to 5%. You know, so therefore, now you're protecting yourself. You're focused on protecting your capital, and you will be fine. All right. But I'm good. I've been on here for about an hour and a half, guys. I think I'm about to get ready to jump.
I appreciate the time, man.
All right. So I hope I was able to answer everyone's questions. Right.
Oh, yeah.
And then those that are on YouTube, make sure you guys subscribe. Make sure you leave your comments and your thoughts down there. And then I'll leave the link in the description. And don't forget, once you click the link, you'll have access to the videos. I'll be releasing the videos in here. Right. So literally anything that you need to learn about options trading. So you guys that was asking question, I would suggest you guys watch these prior videos to kind of help you get started so you can understand everything, right? And then on top of that, I'll continue to try to do the webinars as much as possible to help you guys and do this interaction. And then also after you learn all these different things, every morning I'm sending out the watch list with the prices for you. So now you can apply it for yourself, where I do all of the work to find the best prices for you. Right. And then after that, right, if you want to schedule a one-on-one coaching, we can go more in depth where we literally dive in. Right. So 60-minute video Zoom, where any question that you want to know, I'm able to kind of do a deep dive for you. Right. And then whatever I know, whatever you want to learn, I'm teaching. I'm like an open book, as you guys can see right now. And then for those that want to get my alerts, what you just do, you just click on that and you'll get an upgrade. Right. And you can do the monthly subscription where you're looking at $39.95 or the yearly $349.99. Or if you just want to see it for yourself, you can do a 7-day free trial. Right. And then once you get access, once you subscribe, right, what you're going to do, you're going to get two emails. The first email is going to be your receipt. The second email is going to be the link to the server. You must authorize the member for bot to get full access to everything. And once you sign up, I highly recommend you go through the beginner's guide just to give you some basic info, right, on options trading and how the server is worked. So therefore, you'll be able to put yourself in the best position possible. And then every morning, I'm going to continue to send out the watch list in here. I'm going to let you know and teach you, educate you as I get into these trades so you can understand why we get into these trades. And I'm also letting you know the prices of the contract before we get into these trades. So therefore, you can get into these trades with me, right? So all that is there for you. And on top of that, right, after I send out the signal, I come in here, I send out the signal. Every signal is affordable. It's less than $130, right? Less than $130. So it's very affordable for you guys to get into it, right? And then after I send out the signal, I come in here, I keep you posted. I let you know when you should be taking profits. So therefore, there's never any reason why you shouldn't know what to do with your contract. I let you know if the trade is not going well, right? And in the last 28 trades, I've won 26 out of the 28 trades. I've had 2 losses, as I showed earlier, right, which was this one, the 8%, and then the 20%. And other than that, it's just been purely wins, over 92% hit rate. This was the second loss, right? So it's just been pure wins, right? So, and then congrats and shout out to all our members that's on here that joined us tonight. I appreciate you guys for jumping on and wanting to learn and better, get yourself better in the market, right? I appreciate that. And then for those that are following, I'll see you guys. Make sure you leave a thumbs up. Right, and then I'll see you guys in the next video. Thanks, guys. Have a great night.
Thanks, man. You have a good night too.
All right, thank you, guys. Bye.